Hi everyone, welcome to our webinar. We're just giving everyone a few more minutes before we get started. So in the next few minutes, we'll start our broadcast. Okay, it looks like we've got a ton of attendees now. Steve, are you ready to start up? Okay, welcome everyone to our webinar, ASC 606 Automation and Controls with Tyler Technologies. A few housekeeping items before we get started. This will be for 1 CPE credit for those who are interested. You just have to be engaged for a 50-minute hour and answer our 4 polling questions when you are prompted to do so. If you have any technical difficulties, feel free to chat us. We'll make sure you get your credit. We will send out CPE certificates following the webinar as well. Give us a few days to get those posted, and we will send them out as soon as we can. As far as GoToWebinar reminders go, if you have any questions throughout the presentation, you're welcome to use the GoToWebinar chat box or the questions box. Feel free to submit your questions, and we'll either answer them throughout the presentation if we have time or at the end. And if we don't get to any of those questions, we will follow up afterwards and make sure we get any of your answers, any of your questions answered. Okay, so just to go over our agenda for the day, we are going to introduce Softtracks and our modular revenue manager. And then we'll introduce Steve Kovac, who's joining us today from Tyler Technologies. And today we're going to talk about revenue recognition, the past, present, and future. We're going to look at, what went on from a guidance perspective from 605 to 606, as well as, what we're looking forward to in the future. And we're going to talk about it based on that guidance as well as a systems perspective. So really focusing on, again, that modular purpose-built automated tool with the constraints of scalability and controls as our consideration, because we are joined today by Tyler Technologies. And so we're going to walk through their challenges and experiences as well as what they did to solution their implementation for ASC 606. So first things first, a little bit about Softtracks. We are based in Boston, Massachusetts. We are a division of AFS Technologies, and there are offices all over the globe. We are actually on our 4th generation of architecture, soon to be 5th, to handle complex revenue recognition. And we have deployed a ton of time, so we have a lot of experience in that revenue management space. My name is Kristen Lawson, and I come to you from an accounting background. I have my CPA here in Massachusetts. I previously worked in accounting for Deloitte, and now I'm the sales engineer here at Softtracks, really focused on that revenue management module. And I'm joined today by Steve Kovac, who is the ASC 606 implementation project manager for Tyler Technologies. He has an awesome background as a CFO, COO of so many top 100 top Fortune 500 companies, and he is licensed as a CPA in Colorado and Texas. Tyler Technologies is a public sector software company based in Texas, and it's the largest software company in the United States, solely based on providing integrated software and technology services to the public sector. Their software has solution in areas of appraisal and tax, civic services, courts and justice, data and insights, ERP financial, public safety, schools, a ton of broad categories there. And they have over 15,000 clients in the public sector entities and K-12 schools throughout the US and their territories. And as an awesome stat, they have 27 consecutive quarters of revenue growth. So they're a pretty big company, and they'll have a lot of experience to share with us today. Okay, so the first thing we're actually going to do is jump into our first polling question. So I'm going to bring up a polling question. Please take some time to answer the question. And while you guys are doing that, actually, Steve, to kind of, open the floor up and introduce Tyler, can you tell us a little bit about what you guys did to start your implementation and assessment of ASC 606? Steve, are you there?
I'm sorry. I have a cold, and so I was on mute. We took about 90 days initially, and one of the things we did was we got a copy of the Big Four have white papers out that really state the standard and opinions and questions and answers. We used Ernst & Young's, who is our auditor. I think it's probably one of the best out there. It's about 400 pages, though. We spent a lot of time reading and understanding that and determining how it was applicable to the areas that were applicable to us. We chose the full retrospective method rather than the modified approach, which is a little bit more comprehensive. There was not a high percentage of companies that actually did that. We hired an audit firm to handle some independent opinions regarding our customer life, hired a project manager, and we had a team of about 10, all with, including the project manager. Those 9 had regular jobs as well, and 2 of them were in IT. So it was quite a process to get started, and I would say we probably had 3 full months of just getting ready.
Wow. So it's quite a time commitment, as well as an organization, a commitment to organizing and scoping out the entire project before it even begins, especially because you guys are so big and have a lot to go through.
Correct.
Right. Okay. All right. So based on our results, it looks like 42% adoption is fully complete. That's awesome, especially since for a lot of our public companies, we're already a year into implementation, and 30% are in implementation. Hopefully, some of those are private companies who are getting ready to submit their financial results for 2019 or for 2018, excuse me. But okay, that's great. Let's go ahead then and jump into our first topic. So we're going to talk about the past and the present of revenue recognition. We're going to go and dive into sort of our guidance and our systems of ASC 605 as well as ASC 606, and talk about the disparate standards that used to be in the past and moving towards those targeted solutions. All right, so the past from a guidance perspective. I just kind of wanted to highlight that a lot of the guidance from ASC 605 was very industry specific, especially, from a software vertical perspective. There were different types of contracts, and they all had different, ways to handle those contracts. And then maybe if you were in manufacturing and construction, you were dealing with long-term, cost management contracts. It was also separate from IFRS. So those multinational companies who were dealing with foreign exchange rates and considerations, they also then had to deal with the IFRS standards. So, there are tons of different, conglomerate of standards that we had to look at for ASC 605, and the intention behind ASC 606 was to sort of bring those together. From a guidance perspective, Steve, what was Tyler doing? Was it a lot different under ASC 605 than it is under 606?
Well, first of all, let me mention I'm speaking from a software standpoint. The software industry was probably the most affected by this. There were similarities, but we used mostly the residual method where any discounts applied to the license, and everything else was sold pretty much at regular price. And so in moving from the residual method and VSOE to the full allocation and the use of SSPs and deriving those SSPs, that was probably the biggest change that we had to deal with.
Yeah, I think we have seen a lot of that, especially as a lot of our customers were typically software customers, and they had the most complex issues. And now we're still seeing a lot of those changes from ASC 606 coming forward, and they're all looking to manage the allocations and the standalone selling price. So I think you're not alone there. In terms of the order to cash and order to revenue process, I just kind of wanted to touch on the fact that a lot of practices were done to kind of marry those two in 605. Maybe billing was driving the revenue recognition practice because they were it happened at the same time. Once you build a customer, you were allowed to recognize the revenue. And so the systems were generally order management driven rather than revenue management driven. So that leads us sort of into this next slide, where I just kind of wanted to give us a systems perspective. So many people were handling this contract management through monolithic ERP systems or one vendor platform that could kind of take all those contracts, bill out those invoices, recognize the revenue, and it was all on the same platform. And today, sort of the complexity there is the separation of those two. So you can kind of just imagine all those contracts coming in and going straight to the GL on the revenue recognition side. So now let's talk about what's happening today, the present from a guidance perspective in ASC 606. So the core principle of the guidance essentially is that an entity should recognize revenue, depending on the transfer of promised goods or services to customers in an amount that reflects the consideration to which they expect to be entitled. And to achieve those core principles, we want to follow the five-step method. Identify the contract with a customer, identify the performance obligations, determine the transaction price, allocate the transaction price to those performance obligations, and then recognize revenue. Many of you are now fully adopted or within the implementation process now, so these are very familiar to you. But just kind of talk about some of the struggles that we've seen is, even just identifying the contract with a customer. Companies are struggling with this because maybe they place contracts on hold pending some sort of condition of delivery or even signatures, that type of thing, which was not really an issue before in terms of recognizing the revenue. In identifying the performance obligations, this we've seen, if you've seen any of our previous webinars, you've seen that the practical expedient people are picking the most, is around this definition of performance obligation. And if things are within a year, maybe they don't have to allocate, and all the other practical expedients within the guidance for performance obligations. And then in determining the transaction price, we've seen problems with these bundles. So especially in the software vertical, if you are selling a bundle of services and licenses and maintenance and things like that, then determining really what the full transaction price is for the bundle and carving out material rights or variable consideration, that's been quite a big deal. And then step 4 and 5, This really deals with the allocation process and standalone selling prices, standalone selling price maintenance of those bundles, and the software vertical has been crazy. So, I mean, Steve, in your experience, was that the hardest part, step 4, in terms of, maintaining the standalone selling prices and allocating to those individual performance obligations?
Well, that was probably the easiest part, because the revenue manager does that for us. And in fact, as we got into the audit, the very first thing that was done was checking to see if the allocations were correct. If there were any problems in that area, it was, is the SSP stated correctly? But I would say that probably our biggest challenge had to do with conversion. If you have a revenue engine now, that revenue engine has certain fields that it captures, and moving to another automated product, you've got to line up, a lot of square pegs with round holes and get it right. We had to go back to 2010 to get a balance, an opening balance, because our opening balance was January 1st of 2016, or if you will, the ending balance at 12/31/15. And so if we had contracts in progress at the end of 15, we had to go back to 2010 and convert those to 606 so that we could come up with that opening balance. And that came with all sorts of challenges. Just maybe to give one example is in 606, your services, you use an input or output method. In the software industry, it's probably most likely going to be hours that are applied to services, and you use essentially a percentage of completion type method. If you've incurred 50% of the hours, you're going to be recognizing 50% of that POB, or performance obligation. Well, we didn't have hours going back, so we had to come up with another method, and we had to demonstrate that our application of billings approximated the hours. So we had to actually tell the system how much to recognize in each period that we restated, and had to feed them that information and use the billing files to create that information for what to recognize on the services. So just the whole conversion process itself was absolutely the biggest challenge.
Wow. Okay, so a lot of that also just comes down to the systems that are in place and how much data you have available to be able to do that. And then it sounds like even step 5 was probably the most difficult, because if you have different pieces of the contract that have different types of recognition patterns, and being able to apply those separately to the individual performance obligations, it sounds like it's a lot of moving parts within each contract. So you have to be able to recognize those individual obligations and those individual methods.
Right.
Okay. And you made a good point about, the billing systems and the system side of it. That's kind of what we're going to talk through next here. In terms of separating that order to cash process now, because you have these different moving parts on the revenue side, you have to be able to marry those two together, which can be extremely difficult if your billing and your revenue system are one and the same. So people are now looking towards, a system that's flexible for order management as well as revenue management. So our title here at the top says revenue recognition in the present. Close is no longer good enough. And I just wanted to touch on that briefly, because under 605, I think a lot of people kind of, because they had the flexibility to have their own industry standards, or, be flexible with their guidance, and not everyone was doing the same thing. they were close enough. And now, because of these new standards, everyone is under the microscope in terms of being able to manage their policies the same as everybody else. And so having a new system and new processes in place is really causing a lot of issues for people. Okay. A couple of additional considerations that I definitely don't want to skip over. The first one is cost capitalization. So Steve, you and I talked about this quite a bit. What's Tyler's thoughts on cost capitalization and this incremental cost of obtaining a contract and how that's influencing your business today?
Well, I think a strict interpretation of 606 says that you take your commissions. Yeah, I mean your commissions are a big cost, at least in software, and those are needed to be amortized essentially over the life that product or that performance obligation provides revenue. So in the case of the software industry, if you have a perpetual license that a customer bought a long time ago and they're still on it years later, and your revenue stream after selling them that license has been on maintenance and from time to time professional services after the original implementation, your commissions now have to be amortized over this long period. Tyler has a 97% retention rate on their customers, and we have customers, a lot of customers that have been on our particular products for 20 or 30 years, which caused a unique problem for the auditors, because even though the standard says it, they don't want to see a big honking asset of prepaid commissions, if you will, getting larger and larger and larger on your balance sheet. So we hired another Big Four firm to do a customer lifing study. And what they had to do was they interviewed our engineering, software engineering folks and managers and product management people, and determined that, for example, that even though they were on a particular product for 30 years and it was still called the same thing, with enhancements and new developments and programming, at some point, version 10 became essentially a new product, and we ended up with lifing amortization schedules, sort of like depreciation schedules of 3, 5, and 7 years based upon that. But had we not gone through that process, we would have had 20 and 30 year amortization. I would encourage you, those of you that are just getting started or in process, if you haven't addressed that commission piece of 606, it's going to take you a lot more time than you think. And the earlier you at least get that going, the better off you're going to be, because there's a tendency to kind of ignore that. Oh, we'll do that at the end, and you think you're close, and then all of a sudden you have a big effort like we did to do it. And we had heard that at a seminar just like this when we got started, and we did get on it early, and I think it was lucky that we did.
Yeah, I think that's great advice. We've actually heard that from a number of other customers and prospects as well, is that they're struggling with cost capitalization and they don't know what they're going to do from a commission standpoint, because a lot of their contracts are very fluid in terms of renewals or customer life, and trying to define that within their revenue streams is very difficult. And maybe they don't have the systems or the data in place to help manage that as well. So they're trying to figure out how to fit that into their assessment and into their implementation. And one of the other things that we've gotten feedback on are these disclosures. And I just wanted to briefly mention, that we've talked about them a ton in other webinars. So I'm only just going to highlight that, you kind of have to think about the data availability. You just have to really focus on how you're going to disaggregate the revenue and what kind of qualitative and quantitative measures you're going to put out there, and whether or not there's sufficient information to support that. So the systems comes into a big play here. Okay, so I'm going to go back to this slide, and what I've done is add a couple more boxes here that you can see. And this is the present from a systems perspective. So we're kind of talking about data availability and the implications of allocation on this contract management process. So, before there were no Excel spreadsheets and there was no Excel within this contract management system. There was just a platform where you took all your contracts and you billed and you recognized the revenue and you reported on it. But now, because there's allocation, you have to separate these performance obligations, and you have to be able to allocate that transaction price down and separate those individual recognition practices. People are adding band-aids for Excel solution, or they need additional support for contract modifications, or additional support for those commissions, or additional support for SSP maintenance. And so this is kind of, the systems are breaking. They're not supportive of all these different practices and all these new things that are standard now. So from a systems perspective, Steve, did you guys ever deal with any of these issues with your systems?
Well, probably it's worth mentioning spreadsheets. It was prior to 606, it was impossible for us to use spreadsheets because we're at $1 billion in revenues with tens of thousands of contracts, and it wouldn't be practical. Although during the conversion, we had certain divisions and certain types of contracts that we were tempted to put on Excel just to move on because they had unique issues. But one of the reasons we didn't, and one of the reasons where Excel is going to get you in trouble, is contract modifications. There are contract modifications that come in that have to be designated in 3 categories. It can be a separate contract, or it can have a prospective allocation, or you have to go back to the very beginning, add the performance obligations that are being added to the contract, and do a retroactive from the beginning reallocation. And if you are going to attempt to do that with Excel spreadsheets, that's going to get real onerous and leave you open to lots of errors.
Yeah, I think talking about contract modifications is a great point. We've seen a lot of people come through and say that they don't know how to even automate contract modifications, or they don't know what process they're going to have to go through to manage that. And so they're attempting to do it in Excel spreadsheets, or they're attempting to do it in another system, and it's not working. Another one may be if you are handling multi-currency translations or foreign exchanges and things like that. Some people are handling that in Excel spreadsheet, or significant financing component. People are kind of pushing some of the bigger concerns of ASC 606 off to the side and hoping that Excel spreadsheets will solve it, or another system will solve it. And again, it's just not working. And especially for Tyler, if you're handling such large volumes and such large contracts, then the scalability is just not there to be able to support that. And then there's no controls in place as well. So auditing that would be a mess. Okay, so let's go on to our next polling question. Again, I'm going to launch the poll. Please make sure you take some time to answer it. How is your company planning to comply with ASC 606? So let us know what you are doing to implement ASC 606. Are you using a spreadsheet in any fashion? Are you using an ERP system or a modular solution? Okay, I'm just going to give you guys a few more seconds, and then I'm going to close the poll and we'll share our results. Okay, let's take a look. Okay, so we're split 50-50 almost with Excel spreadsheets and ERP systems. Interesting. Okay. So it looks like, and we also have more than 100%. So it looks like maybe not everyone's solely using Excel spreadsheets, but you are in some manner. Well, maybe it's time to look at a better solution. Okay, so let's close this poll and go back to our presentation. So rather than using Excel spreadsheets, a lot of companies now, from a systems perspective, are looking at modular solutions. There were 15% of you who said that you are considering a modular solution or you're using one now. That's awesome. People are looking for purpose-built solutions that are flexible and modular to align with today's business practices, as well as support for ASC 606. I think something that's really important to consider, and we'll talk about with Revenue Manager, is how flexible it is in terms of sustainability. So can you configure it and then reconfigure it if your business ever changes? And then, things that are very important, I think, and we'll ask Steve here in a second, but things that are important for some of our customers, especially those software verticals, will be data availability as well as scalability. So high volume, what are you doing to support the automation and controls? Steve, do you have any advice then for other companies who are considering, a solution, a modular solution?
Well, we, and this really is for the folks looking for a solution or thinking about using one. We looked at a bunch of them, and I would recommend if you get a hold of one of those big four white papers and really break it down and look for particular features that you're going to need in your particular business, and really break it down into a long list and look at each provider and see if they have a particular solution for that particular feature. I think in this case, had we gone with a modular solution that had features, it did A, B, C, D, and E, but it didn't do X, Y, and Z. We would have had part of it automated, but we would have had a lot of manual processes sitting below it. So I don't know what is the best solution for your particular company, but I would do the work ahead of time to really sit down and understand which features you're going to need, and really kind of grill the providers to see which ones they provide. We found a huge variance, huge difference in the providers in what features they did provide.
And so in terms of, some of the feature sets that you guys were particularly interested in, what were some of the main features that you were looking at?
Well, we had to handle multi-currency. We had to be able to take our billing system and use the invoices to apply to the transactions to make sure that things got moved from unbilled to billed. We wanted a system that would provide a complete journal entry for all of the revenue transactions, and essentially the AR entry was the same entry coming from Revenue Manager, because Revenue Manager is a sub ledger that we would get from a receivable sub ledger, and the ability to do contract modifications, the ability to roll back journal entries, the ability to drill down on transactions. I mean, it was very feature rich, and then there were other solutions out there that it just kind of did a couple of things.
Right. Yeah, it sounds like you guys have a lot of moving pieces, so it's good that you have a full broad stroke of features to select from. We have been talking to plenty of people about their feature selects, and some people do come to us and they need, 100 different features, or they have a list of the 100 things that they want to be able to do within the system, and it does align with typical of what you're saying. Maybe it's a billing question, or integrating with the billing system. But a lot of it just comes down to the reporting and being able to submit those journal entries. But I do like your point that Revenue Manager is a subledger, and we talked about the modular solution. So let me show you the next slide here. This is the Revenue Manager as a subledger. So I was just going to walk everyone through sort of what the process looks like in terms of this agnostic modular solution. Essentially, you can see down at the bottom, Softtracks Revenue Manager, that is the subledger. So, we will take the order information from the upstream system, and we bring in those revenue and cost items, and we're able to identify the individual performance obligations. Maybe it's a bundle, maybe we need to add additional items, that kind of thing. We can create those performance obligations. We'll determine the total contract value and assign all the appropriate standalone selling prices, the general ledger accounts, the recognition schedules, and we'll allocate the revenue down to those individual performance obligations. And while we're recognizing the revenue associated with each of those performance obligations, we are also, integrated with the fulfillment systems if there are any. So signals to recognize revenue would be, conditions that are met based on delivery, or things that are on hold pending some sort of event, or milestones, or that percentage of completion will wait for those usage events that you talked about earlier, Steve. And then we'll also be waiting for those bills to come in, and we'll marry that invoicing process with the recognition process and invoice matching, and moving those accounts from an unbilled state to a billed state, so we can handle those contract assets and contract liabilities that the guidance is pretty focused on. And then at the end, just like you said, we're generating that full journal entry and submitting it back to the general ledger to marry with that upstream AR account in a detailed fashion. Okay, so that's just a brief look at Revenue Manager. So now I do kind of want to dive in a little bit on your experience at Tyler, just to kind of tell everyone, why you guys picked this modular solution, and sort of what your complexities were and how we handled them in Revenue Manager. So, you can see some compliance complexities as well as business practice complexities. We're talking about high volume versus, complicated scenarios. A lot of companies in the software vertical are dealing with high volume, but not all of them are dealing with high volume and complicated scenarios. So I think Tyler's a really great example of, everything coming up together all at once. So can you tell us a little bit about, some of your complexities in terms of how many contracts you have? And, we already touched on allocation and SSP maintenance, but really maybe just, why you guys were looking for a solution.
Yeah, well, I think you saw, I've been a CFO my whole career. This project was the hardest thing I've ever done. It was fun because it was challenging, but it really did get complex. And what we wanted an automated solution. We didn't want to give up our invoicing system that we have. We didn't want to give up our order entry system, and we needed things to flow from that existing system into the revenue engine and back without having a lot of manual processes. of which we, before we got into it, had enough of those, and we're finding as time goes on here, we're able to use the system to get rid of a lot of manual processes. I mean, as far as the complexities, and just to give one example, is if you when you're applying your invoices to 606, you have let's say you had a license that was $1 million, and after your order has been allocated, that invoice is now 800, or that value of that performance obligation is 800,000. So you sent out an invoice for $1 million because to your customer you still sold that license for $1 million, and now you have to match it up with that performance obligation, which is only 800,000. So you apply that invoice $1 million to a performance obligation of 800,000. Well, what do you do with the other 200,000? That other 200,000 was allocated to other performance obligations. So you better have a system that kind of knows what to do with that other 200,000. It kind of messes with your disaggregated deferred revenue accounts because they're kind of no longer going to be perfect. If your disaggregated revenue accounts are really important as opposed to total deferred revenue, that's something that you want to look at. But that was very complex, and understanding it and how to analyze that and get it right.
Okay, so you're telling me you didn't want to handle disaggregation of revenue and invoice matching manually, especially for your high volume. Yeah, so you also made a couple of really great points that I just want to go back and talk about. You said you didn't want to, replace any of the systems that you had existing already. And that's kind of going back to the idea that Revenue Manager or a modular solution is a subledger, right? It's not meant to replace any of your other systems. It's really meant to augment them and help them and make them more flexible so that you can continue your business practices and improve on them as that subledger. And then you talked.
And Revenue Manager's database structure is built on something that's very common. DBAs and IT folks, are all familiar with working with it, and so you can kind of hook it up easily to other systems. And I know that you guys have done a lot of that for other customers, but that's been very important. If it was kind of an oddball, we'd be tearing our hair out.
Yes, you're very right. We have a ton of people come to us and say, we have 30 upstream systems because, we're a growth company or an acquisition company, or, we're a multinational company, and everyone's on a different system, and we need them all to talk to one another and be able to, run the same recognition practices, because ultimately we have to report on the same standard, but they're struggling because the systems, they're not talking to one another. And so we integrate with everyone's systems and all the upstream systems so that we can manage that for them. And then you talked about sort of, the manual intervention as well, which I think we'll kind of talk about here on the next slide when we talk about scalability. I think that's, one of the biggest drivers and challenges, for you guys, as well as a ton of other people, is that idea of scalability. Not only because you want to be able to automate it, but because you have to be able to control everything that's going through the system and report on it. Finances are just such a big deal that you can't leave it up to, manual intervention and hope that it works. So, I think scalability and compliance really go together in terms of talking about automation and controls. So, Number 3 is ASC 606 considerations. I've kind of outlined, what your standard contracts are, which, here, very short list of standard contracts. Term and perpetual licenses, POC contracts, multi-element arrangements, professional services, so many different considerations that, we've only briefly touched on. But if you're able to automate all of these things, then you don't have to worry as much about the controls and about the auditability of it all. Okay, so, here is just a slide, solutioning with Revenue Manager. Scalability, the transaction volumes are handled timely and accurately, and compliance, the cloud offering. Like you mentioned, there's a full audit trail with SOC compliance. So we're handling all those types of transactions and processing requirements automatically. So is there anything that you want to add to here, Steve, in terms of, talking about the different considerations for ASC 606 and sort of how, scalability and compliance is a really big part of that?
Well, I mean, in terms of scalability, we converted 1 million performance obligations in just getting the restatement done. So the system was able to handle us. I think it should be able to handle most folks. And once we got to the monthly processing and the conversion was done, things get much easier at that point in time.
That's true. So the hope is kind of to streamline the entire period close or financial close process with the automation and being able to reconcile everything back accurately. I think that's a good point. Okay, so we now are going to launch our third polling question. So again, I'm going to give you 30-45 seconds to answer. Please make sure you vote. The question is, which ASC 606 disclosure requirement is most complex and or challenging for your company? Disaggregation of revenue, presentation of contract balances, significant judgments. Those are 2 separate categories. Steve, can you tell me what was probably the most complex based on our last discussion? I know you guys did a big assessment. So what complexities did you guys see?
I mean, I talked about some of them, but in this regard, I don't think we didn't do enough use cases. And when you get this software, you're going to develop some actual business cases, run them through the system, look at the output, before you implement this. And we did pretty much simple, does it handle POC or percent of completion contracts? What happens in a case where you have a SaaS offering combined with other elements? How is that allocated? And we kind of went through all the features that Softtracks made available and built use cases based on that, instead of bringing in the actual users at their desks that deal with it every day and trying to break the system, because there's all kinds of exceptions in every company. And to the extent you can get all of those down into use cases and get in a room and run through those and determine how it's going to affect you going forward, the whole change management issue. Another thing that we did is in our data conversion, we bifurcated our data sets. So we said, okay, these are multi-element contracts. These are pure SaaS contracts, because the SaaS contracts should give you the same, when you run them through 606, you don't get a change, you get the same answer. So when we ran those through, we wanted to make sure that the output was the same as the input. And then we bifurcated SaaS combined with other elements. We bifurcated the renewals, and then we made sure ahead of time that we had controls, because when your auditors come in, they're going to be looking at whether your conversion was accurate and complete. And so you have to have controls set around to make sure that that all of the data that you took out of the old system and put into Revenue Manager, you got everything. And of course that it was, and do some testing to make sure that it was accurate. And you can do that through these use text cases and also testing of the output. So I don't know if that answered the questions, but that's really, kind of when we got into the complexities of it. How are we going to do this, and how are we going to control this? Control was very important.
Yeah, I think that's a really interesting point, actually, that, the worst part was putting together the individual use cases, and then maybe you didn't even have enough of them. And then it kind of led into your discussion of audit and completion and testing. We are seeing a lot of people now that are running into this issue of the audit trail and things like that, because now that they're finally going through financial close, they're wondering how they're going to be able to test for accuracy. And those use cases can play a big role. I also thought it was really interesting that you said, we should have probably just tried to break it. We should have tried to look for the outliers of those exception use cases maybe a little sooner rather than later, to be able to find what you were looking for or not looking for, right? You don't know what you don't know. So that's maybe a good piece of advice for people. Okay, so let's move on then to our last topic. I know we're kind of running on the end of our webinar here, so let's just talk briefly about the future. What does the future of revenue recognition look like? And we're going to start out by talking a little bit about, what we hope that it looks like if you're picking a modular solution or implementing Revenue Manager. We really want you to be able to focus on reporting and analytics. So moving away from a data-driven process and towards analytics for business decision making. So being able to focus on what's actually happening in terms of what the contracts look like, how long they're going to be recognized, maybe customer retention, things like that. What does that look like? And quicker reconciliations and comparison reporting. So we did talk about the financial close process and the ultimate goal of being able to, test everything, make sure it's accurate, and then really reconciling it. And then flexibility for growth, configurations and implementations. One of the things we didn't spend a whole lot of time on was configuration of a modular solution, but that's really important. So if your business model is ever going to change, or for instance, you're going to take on new customers, or you're going to grow, or you're going to acquire new business, being able to configure and reconfigure a system is really important. How quick was it to implement? What were the steps involved? And based on Steve's response, it takes a lot of planning to implement a new solution. So you kind of have to think up front and be able to work through the whole process. And automations and controls is really what we're talking about today. So support for audit and the evolution of the business. So let's move on to our last one then. Some of these complexities, answers to why people are looking for systems. So I touched on a few of these on the last slide, growth, mergers and acquisitions, the disparate industry standards, analytics, data transformation, international considerations, multi-currency. So, Steve, based on Tyler's story, and everyone is unique. What do you think some of the changes are going to be down the road for you guys, and how are you guys looking to manage that?
Well, more little picture than big picture, and knowing how much time we have left, I'll just say that we had a lot of things going on at the data input point, where the contracts came in and had to be often converted to fit into our system. And Revenue Manager really forced us, because of the automation and because you have a price book, and in the price book you have hopefully accurate SSPs, and it forced us to kind of standardize on some processes from quoting all the way to order entry, and automate those things with orders coming in automatic, being correct, and it's allowing our data input people to become data reviewers instead of data input people, which will certainly reduce the amount of headcount we have to add in the future. And also, Tyler is, oh gosh, I don't know how many, in the last 12 months, they've done maybe 6 acquisitions. They're very acquisition proactive right now. And with having this platform, as these acquisitions come in, we're able to easily add people to, you know, a common platform across the company and get them converted over to 606. Most of them are private, and many of them were not at the time 606. So I think it's just going to help us go forward in terms of efficiency, doing higher value add work instead of down in the trees of the forest.
Yeah. You know, as somebody who started out at the bottom rung in a public accounting firm, I can appreciate the fact that you want your employees to have value add rather than be data entry. That's one of the reasons I love the software, is because you can certainly make things more efficient, right? That's a great point, and really make everything consistent across the board for automations and controls. All right, so let's go ahead and launch our last polling question so we can all get our CPE credit here. All right, so everyone needs to answer the last question. It is, what are the major business implications of implementing ASC 606 for your company? And you can select all that apply to you. And, you know, Steve just kind of talked about what was most important for them, you know, volumes of revenue transactions, complicated revenue treatments, all of it essentially was applicable for Tyler. But I think we'll see answers all across the board here. All right, so take a few more seconds and then we'll close our poll. All right, let's see what everyone has to say. Okay, so it looks like our audience is very considerate of complicated revenue treatments and audit and control considerations, and we like that answer. That's definitely something we can potentially help you with if you're not already looking at a modular solution. And we hope actually that you've gotten some good insight from Steve about Tyler and their experience. So I just have, you know, one more slide of resources for you. But otherwise, Steve, thank you so much for providing your insight today. If anybody has any questions, please submit them in the chat box. I know we're out of time, so we won't cover any today. But you're welcome to submit more questions in the next few minutes, and we'll gather those and give you a response. We do have some resources up. There are handouts as well in the GoToWebinar. So if you'd like to download this slideshow or another handout on Revenue Manager, please feel free to do so. If you'd like to reach out to Steve or I, here is our contact information. But thank you so much, everyone, for joining. And Steve, thank you again for participating.
My pleasure.
And CPE credit will again be awarded for those who participated and engaged in the polling questions, and we will get those credits out as soon as possible. All right, thank you guys.